Hey everybody, Terry the Real Estate Guy here. Thank you so much for tuning in. I have a great video for you guys today, for homebuyers especially. Should you buy a house now or should you wait until the market crashes? All right, so there's lots of talk right now about a 2021 housing crash. If you look on YouTube about 2021 housing crash, there's tons of people with views out there like Ken McElroy, and why are they even talking about this? Like, what's the big deal? Why should there be a housing crash coming up in 2021? Well, it's simple, really. Like, there are lots of things swirling around the world that can cause economic uncertainty, right? And so one of those things is a pandemic, for example. There are things like mortgage forbearance. What does that mean? That was a word that most people didn't even know up until about 6 months ago. There's this brewing eviction crisis, people not being able to pay their rent, right? What's going to happen to those houses when the landlords can't pay their mortgages? The housing market is on fire right now because you have such low inventory, which is causing house prices to rise. And then you have these insanely low interest rates, which are also driving prices up. So everyone expects a crash, but you know what? Will there be one? I don't know. I'm not so sure. Let's talk about what it would take for the market to crash, first of all. If we use history as our guide, there are types of things that could cause a crash or bubble or even a correction, right? So high interest rates is one. That can cause a correction. We don't have those right now, right? But there's high unemployment, there's economic uncertainty, there's crazy things happening in the world. Like, we have those three things for sure. Do you know back in the 70s and 80s, there were recessions that were caused in each decade caused by something that America could not control? Oil. Oil sent the world in a tailspin back in the 70s and 80s and caused actually 2 recessions, just like the pandemic is causing a recession today. I'm going to link to an article from the Harvard University Joint Center for Housing Studies. There's a guy that's really smart, so I'll link to that blog post down below. But he went back and he studied all the recessions from 1960 and found out that home prices only fell on average 5% out of all the recessions. It's really interesting, right? But the worst recession on record for housing since 1960 saw declines of 13%, and that's no surprise to most of you. Those were the Great Recession of 2008. Okay, that's the only noticeable recession, by the way, that had no impact on housing was the one that happened in 2001 when we went through that whole thing with the World Trade Centers collapsing and terrorism and all that stuff. There was a little bit of a recession right there. So you are wondering, you know, if you're a home buyer, should I buy now? Is the market too hot? What should I do? So here's what we're gonna do. We're gonna do a little exercise because I like data. I like to be shored up on exactly what works, what doesn't work, and I like to back those things up with data. So here's what we're gonna do. We're gonna jump in and we're gonna look at the Zillow mortgage calculator for a second. I'm gonna run a couple of scenarios for you, okay? So here we go. Okay, the median home price in America is $319,000. So we're going to go with just a kind of a even number to make it easy. We're going to go with a home price of $300,000. So if you're a home buyer right now and you're going to buy a home for $300,000, and I'm just going to assume that you're going to put 10% down. Not everybody in America can put 20% down. So let's just try to keep real numbers. So I'm just trying to keep some baseline numbers. We have a 30-year fixed loan product here. And the rates today, so let's talk about the rates today. The rates today are somewhere between 2 point something and 3 point something, right? And all that depends on your credit score. If you've got a ridiculously good credit score, then your interest rate is going to be lower. And it'll probably start with a 2, honestly, 2.9, 2.875, something like that as of the day of this video. If you have above average average credit, that number more than likely is going to start with some sort of a 3. So I'm going to keep this real conservative for us, and I'm just going to say 3.25. 3.25%. I'm going to take the PMI off, but that's something you need to talk to your loan officer about. I just really want you to see principal, interest, taxes, and insurance. That's what I want you to be looking at. Okay, I'm gonna make the property taxes a little bit more realistic for the median part of the country, and I'm going to put it in at 1.25% of the home price. And then this insurance is a little low in my opinion. I'm going to change that to $1,800 a year. Okay, so today, if you were to buy a house, your principal, interest, taxes, and insurance payment is going to be $1,638. Okay, does that all make sense? $300,000 home price, 10% down, 30-year conventional loan product. 3.25% interest rate, taxes and insurance included. Now, if you live in a homeowners association or something like that, you can use the Zillow calculator to figure that out, but I left that off just to keep it a little bit more simple, okay? All right, now, let's assume that you are able to time this so-called 2021 housing crash, right? That's gonna happen, and that I don't believe will happen, but that's a different video. So, first of all, you have to know when it's gonna happen. Second of all, you have to time the market appropriately, which means if you're gonna take advantage of it fully, you have to kind of buy on the dip. And let's talk about a housing crash. Housing doesn't crash like the stock market. Okay, yes, they call it a housing crash, but it usually takes several months for the market to adjust down. Like the stock market can crash 15, 20% in one day, right? And that would be terrible, right? It'd be a huge issue. But the housing market, oh my goodness, if it caved 15 or 20% in one day, well, we have a whole lot of other problems. That's never happened where the market has gone down in recent times, modern times, where the market's gone down that fast, that quickly. It usually happens, it ticks down every month. In fact, I found a really cool chart, a spreadsheet that I'll link below as well, that has all the mortgage rates since 1970 by month, so you can kind of see how things went. Like when my dad was buying a house back in the 80s, the rates were like 22%. And that sounds crazy, doesn't it? But the housing values went down during that particular recession, 25%. So this is today. This is real world today, according to the mortgage calculator. Now I do want to go, and I'm going to duplicate this now. So we're going to say that the worst recession on record, as I said earlier, was 13%. So let me make it worse. Let's say that this next housing crash is going to be way worse, and it's going to dip by 20%. Okay, 20%. So I'm going to give you a 20% discount on your house. Okay, so let's do that. I'm going to put in here 20% discount is going to yield $240,000 home price. Everybody's excited, right? You got a big discount on your house. We're still going to put 10% down. You have to put less money down even. That's great. Oh, but there's one problem. This interest rate. There is no way that the housing market is going to correct and interest rates are going to stay at this insanely low number. So let's figure out what that would look like. Well, like I told you, my dad had 20% interest rates back in the 80s when my dad and mom bought a house. When I first bought a house back in like 1998, 1999 or 95, I can't even remember when that was. But it was after I graduated from college. My interest rate was 7%. I thought I had hit the jackpot. At the time, those were record lows. And my dad thought I hit the jackpot too. He's like, rates are just insanely low. We're never going to see rates this low again. But what is it going to be in the next recession? What are rates going to be in the next recession? So we're going to change these rates a little bit, and we're going to agree that maybe they would be somewhere between 5 and 6. They certainly could be 7. But let's just kind of go conservative and say those would be between 5 and 6%. Now, a 5% interest rate a couple years ago, you thought you won the lottery then too, didn't you? And they're half that today almost. So we're going to punch in 5.5. And I'm going to show the advanced part of the calculator. I'm going to take the PMI off like I did before. We're going to change the property taxes to 1.25%, just like before. So everything's the same. And then we're going to add the homeowner's insurance and make it match. And there you go. There is your housing price, $16.26 a month during the next huge housing crash, so-called. So let's look at that number compared to what we bought today. $16.26. Oh, there you go. You're saving $12 a month. $12 a month. That's like 2 Starbucks drinks, maybe 3 if you're drinking regular coffee, right? So here's what I'm going to tell you. There's a lot of noise out there. If you're a home buyer today, particularly a first-time home buyer, but a home buyer in general, this is what happens. You get all excited about buying a house. You call mom and dad, or you tell your friends, family, whatever, and you say, hey, I'm going to go buy a house today, or start looking for a house. Here's what happens. They back up the U-Haul truck. Beep, beep, beep. They're backing up this U-Haul truck, and they dump all their real estate garbage and baggage right on top of you, and it overwhelms you. It causes a bunch of noise, right? So there's noise coming in this ear, there's noise coming in this ear, you've got an agent telling you other noise, you have your parents, your friends, everybody else telling you all this other noise. Data, go back to the data. I just showed you. I just showed you, if you bought a house today at these insanely low interest rates, you're gonna have the same monthly payment as you would is if you bought on a 20% dip and the payment goes up, or the interest rate goes up 2 percentage points or 2.5 percentage points. So should you buy? I don't know. I don't live in your life, right? Should you buy a house now? Yes, I think it's a great time to buy a house, but only if you meet the following couple of conditions. One, plan on living in it 5 years or more. 5 years or more. Okay, 7 years or more is preferable. But if you think you're gonna live in that house for 5 years or more, absolutely it's a great time to buy. If it's gonna be 3 years or less, I might think about that one for a minute. I might actually rent, right? I might maybe try to do a lease purchase or something a little more creative if it's 3 years or less. But 5, 7 years or more, yeah, go buy a house. Live the American dream. Own your own piece of real estate. Later on, that piece of real estate can turn into an investment property for you and actually pay you money as opposed to you paying a mortgage. Okay? So that's my advice. I hope you've found this information helpful. And if you have, could you do me a huge favor? Would you just share this with people you know that might be buying and selling a house? And would you subscribe and would you like my channel? It helps other people on YouTube find it. I'm an unbiased resource, you guys. I don't get paid to do any of this. It's all 20 years of real estate knowledge up here has to come out and teach. And that's just who I am. And I hope you have a great day. Thanks for spending time with me. I know your time is valuable. Have a great day. Go crush it. And if you buy a house, comment below. Let me know what you think. Have a great one.